Hello, thanks for joining us today for the latest behind-the-scenes look at our Dunham Investment Committee's allocations, decisions, and insights for the first quarter of 2024. There were many changes amid the shifting financial landscape, so let's take a closer look. This quarter, our investment committee took a deep dive into the ins and outs of the economy, markets, monetary policy, and geopolitics. And while there are many factors, there's one trend that's changed since our last quarter, which is the Federal Reserve indicating that the tightening cycle is done and will instead potentially begin cutting interest rates over 2024. A significant theme in 2023 was that our investment committee believed that interest rates would peak by the end of 2023, and after seeing rates seemingly peak in October, it's time to continue reallocating towards a lower rate environment. After many diligent debates, the consensus view continued leaning towards the likelihood of a soft landing scenario that, although may be bumpy, may be supported by loosening financial conditions from the Federal Reserve talking about rate cuts publicly. Because of this, the investment committee agreed to make changes in the allocations for both the Dunham core fixed income and core equity portfolios. The key theme within our core fixed income allocation is the rotation further into duration, scaling back from both the Dunham Floating Rate Bond Fund and the Dunham Monthly Distribution Fund, to reallocate into the Dunham Corporate Government Bond Fund and the Dunham High Yield Bond Fund that may potentially capture upside from lower interest rates. And in order to offset both the increased duration and credit risk, we've bolstered our investment in the Dunham Long-Short Credit Fund, a historically lower risk asset with minimal duration exposure. Next, in our core equity portfolios, the key theme is shifting away from U.S. large-cap value and real estate positions and into U.S. small-cap growth and value that may benefit from lower interest rates and a soft landing. The investment committee agreed that both the Dunham Small Cap Value Fund and the Dunham Small Cap Growth Fund offer more upside relative to the Dunham Large Cap Value Fund and Dunham Real Estate Stock Fund going forward as interest rates potentially come down and growth moderates, which could create a favorable risk-reward scenario. The committee also increased allocations in the Dunham Dynamic Macro Fund because of its ability to go both actively short and long, offering potential upside in whichever way the market goes. These allocation changes are carefully thought out by the Dunham Investment Committee, so let's take a closer look. This wraps up our first quarter review of the Dunham Investment Committee. As always, thank you for your attention and see you next quarter. Until then, we at Dunham wish you a safe and prosperous new year.